Welcome to the latest installment of our Seafood News Roundup, sponsored by Urner Barry's Foreign Trade Data Service. I'm your host and Seafood News Editor, Michael Ramsing, with our last report before a much-needed break for the Thanksgiving holiday. And while it might be a short week for us in the industry, there's been plenty of stories to report, and we start today's headline news on the west coast of the United States, where the Pacific Seafood Processors Association named Dr. Christine Lynch as its next Vice President for Government Relations. Dr. Lynch is replacing the retiring Dennis Phelan at the position, which is based in Washington, D.C. In this role, Dr. Lynch will take over Phelan as the voice of the group in the nation's capital. She will advocate for sustainable management, responsible marketing, full utilization, and legislation to support those and other initiatives for the Pacific processors. In other news, Cooke Aquaculture will close a deal to buy all of the assets to Uruguay's largest seafood company, Freeper. The deal expands Cooke's presence as a wild-caught seafood operator in Latin America. The purchase gives Cooke control over Freeper's fishing fleet, which traditionally harvests about 16,000 tons of hake and 1,600 metric tons of red crab each year. This is the second seafood operation Cooke has purchased in Latin America this year. In June, Cooke purchased the Juan Cheese Fishing Company, which owns 3 fishing vessels in Argentina that harvest wild scallops, shrimp, oysters, and king crab. We have some other company news this time out of Newfoundland, Canada, where Ocean Choice International secured a refinancing loan in a deal orchestrated by Antarctica Advisors. This ends an odyssey for OCI's owners, Martin and Blaine Sullivan, who have been trying to refinance the company's operational debt since 2014. The matter turned into a major dispute between the Sullivans and a minority shareholder over control of the company. The Sullivans ultimately filed a lawsuit accusing shareholders of conspiracy to squash the refinancing bid in order to force the sale of the company. Results of the lawsuit are still pending, but company CEO Martin Sullivan said OCI now has flexible capital structure that will allow it to grow and develop for the benefit of its stakeholders, customers, and employees. Finally, U.S. prices for frozen imported octopus from the Philippines and Indonesia are now at 52-week high levels, according to Urner Barry. This strong market behavior is a function of shorter supplies and higher demand for octopus in the U.S. Octopus doesn't command huge sales by volume in the U.S., but it was featured on 20% more menus in 2015, which helped drive up imports 17% last year. However, octopus imports from key suppliers in Indonesia, the Philippines, and Mexico are down this year. It's this dip in imported volumes that's clashed with the higher demand here in the U.S., which explains the higher prices observed in the market last week. Remember, you can read all of these short stories and get much more daily news content from around the industry with a subscription to seafoodnews.com. And as for our top story, we head to the Gulf of Mexico, where shrimp landings in October were just over 11.6 million pounds for the month. This is a 14% decline from last October and a 21% dip in the catch compared to the 5-year average for the fishery in this month. The figure was easily the worst landed volume recorded in October in the last 6 years and is a sign that a fourth quarter bump in Gulf shrimp production is unlikely. This means that Gulf inventories are going to remain tight as the industry wraps up fall-winter season fishing. Gulf landings year to date are now down 18% from the 5-year average for the fishery at this point in the year. It's a difference of almost 20 million pounds. The October landings report just adds to a disappointing season for Gulf shrimp production, at least in terms of volume. Both the spring and fall seasons posted lower volumes compared to 2015 and from the 5-year average for the fishery. More limited raw materials out of the Gulf states sparked a bidding war among processors at the docks this year. The result was higher wholesale prices across the Gulf shrimp complex, with prices for shell-on brown and white shrimp and for domestic puds in most sizes trading at 52-week highs in November, according to Urner Barry. And that concludes today's report, which was brought to you by Urner Barry's Foreign Trade Data. Foreign Trade Data subscribers already know that shrimp imports to the U.S. market are setting a record pace in 2016 and are up 2% for the year so far. Our customers also know that India and Indonesia are the top suppliers to the U.S. market and that shrimp production and imports in Thailand continue to recover this year. That's because Foreign Trade Data is the best online database to track waterborne seafood shipments to the U.S. market. Data is updated in real time and can be easily sorted by date, origin, and port of entry through Foreign Trade Data's powerful dashboard tools. Don't wait to minimize uncertainty, minimize your risk, and uncover opportunities with the only website designed exclusively for the seafood importer and exporter. Start your subscription today by visiting shop.urnerbarry.com or by giving our sales team a call at 732-240-5330. Remember, you can always tell us how we're doing on Twitter by tweeting at us at SeafoodComNews and at UBSeafood, and like Urner Barry and Seafood News on Facebook to learn more about what we're up to. You can also listen to Urner Barry on your mobile device through our Market Digest and Seafood News podcast series. Just search Urner Barry or Seafood News on SoundCloud, iTunes, or Google Play to hear in-depth interviews and reports straight from our expert staff. For Urner Barry and Seafood News, I'm Michael Ramsing. Thanks for watching. Have a happy Thanksgiving, and we'll talk to you all again next week.